The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You've got the phone. Make the call, 800-306-1990, 800-306-1990. And every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry. Calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They only tell us the number you need to put into your mortgage calculator. If you don't have a mortgage calculator, no problem. We've got one for you, and it is free. All you need to do is go to rsrlinks.com/mortgage app, mobile app, rsrlinks.com/mobile app. What did rates do yesterday? Conventional 30-year fixed up 6.657. Jumbo 30-year fixed down 6.776. FHA 30-year fixed 6.348. That was up. VA 30-year fixed 6.192. That was down. And the USDA 30-year fixed 6.384. That one was up. Boy, it looks like a real mixed bag there. It looks like a roller coaster on there. If you want our thoughts about the market each and every business day morning as early as the data allows, we put out our report. Get it for free. Again, another free item. We've got 4 so far today. We've given 4 freebies away. rsrlinks.com/market minute. rsrlinks.com/market minute. And you can get that. Let's see what the markets are doing today. Okay, we've got the 10-year. Well, let's look at the S&P 500 first. We start there all the time. S&P 500 is now up 7.82. And if I can get my mouse to work here, I can find out that the 10-year Treasury is now down 2 basis points. And the mortgage-backed security, that bond, is up 7 basis points. What does that tell us? Well, when the bond goes up, rates go down. It's just the way it works. So it's a roller coaster right there, and it's an inversion, mathematics. So it's not that's what I think, it's what actually happened. Now, what's going on right now? We've got the jobless claims came in this morning, just a little bit below what the expectations were, if you want to believe them. Then you've got the continuing claims, that's up a little bit. So they were forecasting 1.89 million. It came in at 1.892. And we've got the existing home sales. That one came in at 4.26. They're expecting a 3.95. The previous was 4.08. So we're looking at some of these numbers, and they're mixed. That existing home sales is a good number for us, and it means more people are out there buying resale. It's not the builders. So that's finding that people are starting to sell, which is a good thing. Now, yesterday we got the Federal Reserve came out with their commentary. And if you are like me and have no life, you actually listen to some of the ultra boring stuff that comes out. I've had I don't know whether you say it's the pleasure, but I've had the opportunity, I guess is the right word, to listen to several Federal Reserve chair. And I've heard some of them in person, some of them, just watching like we did yesterday. And, to get to be the chairman of the Federal Reserve, you got to be a pretty smart person. I don't necessarily agree with the policies, but, they've got some experience. This Federal Reserve under Powell has got a lot of things wrong, right? They told us in 21 that the inflation was transitory. Well, it wasn't transitory. And they told us that they started raising rates and too late. They should have done them back then to slow things down. They didn't do it when they should have. And if you've been listening any length of time, you've heard my mantra about the Federal Reserve.
Such an idiot.
Yes.
Such an idiot.
Exactly. So because they get them wrong. But even with as off as the Fed is, they're still a lot smarter than the reporters that go in there to ask them questions. And they get some really, really dumb reporters who are not smart enough to figure out, I don't think they can figure out their time of day. But what they're really trying to do is incite friction. And that doesn't make any sense because they're not smart enough to do it. And Fed Chair Powell basically several times said, I'm not going to get into that. Next question. And then that individual who is given an opportunity, and they do that, they have the press conference after the statement release is a 1 hour press conference availability that you ask questions of the Federal Reserve Chairman. And he starts off in the first 4 or 5 minutes, give or take, is him just telling you what they did. They call it his opening statement. And then they allow it's time for maybe 10 people to ask questions. And you get some of these reporters that are fortunate enough to be called upon to ask a question, and they ask something very, very stupid. What is your thoughts about President Trump's tariffs? And Powell said over and over again since Trump's been elected, I'm not going to get into that. That's not my sphere. Next question. And they still ask the same thing. The only thing we did learn that was really a good information that came from yesterday was something about, we talked about this earlier in the week, balance sheet runoff. So the Federal Reserve can create money out of thin air. And basically what they do is they just say, okay, they're going to buy, the Federal Reserve is buying treasuries. So the U.S. Treasury Department issues, short-term bonds, long-term bonds, notes, the whole bit. Well, who buys them? Well, a lot of people buy them, but one of the bigger buyers historically is the Federal Reserve. And if they want to do that, they say, okay, we're going to buy this. They increase the size of their balance sheet. You and I can't do those kind of things. But they just increase the size of their balance sheet and they buy it. And during some of the challenges, the Federal Reserve was buying 10-year treasuries or treasury notes, and they were buying mortgage-backed securities. And as those instruments expire, then they run off. They have the opportunity to run off the balance sheet. Now they can expire by maturing, or in the case of mortgage-backed securities, maybe the consumer refinances. And there's 30% of the loans right now are folks who are doing what they call a debt consolidation loan. If you haven't looked at our process of doing that, go to rsrlinks.com/2step, rsrlinks.com/2step. And you'll see how we talk about that. But 30% of the loans are done through this process. Well, what the Federal Reserve is doing is if a product would mature, or if a mortgage bond was cashed in, refinanced, or whatever, they would let it just fall off and reduce the size of the balance sheet. Well, what the Federal Reserve said they're going to start doing is slowly they're going to stop letting these things run off. Well, what does that mean to you? Well, what that's telling you is that when they go out there, if they don't want to let it run off, if a bond matures, when they don't want it to run off, the Federal Reserve has to go out and buy something new. And that brings in eats up some of the supply of those things, so that the Treasury has to issue these bonds. And now again, where the Federal Reserve wasn't buying them, now they're saying, okay, we're going to keep the balance sheet the same size. So when something matures, they go and buy something back. And that's the idea, what the Federal Chair was talking about. So why is that important to you? Well, it's a supply and demand issue. When you talk about the supply and demand part of that, when supply goes up, if there's not demand to meet it, well, then the price goes down. Price goes down on a bond. That means the interest goes up. The yield goes up. Well, now if the Federal Reserve is out there buying, that means there's more demand. And when the demand is there, price goes up. So the interest or the yield goes down. Now, there's generally a spread, and historically the spread between a 10-year Treasury, which is at 4.226 right now, and a mortgage, a 30-year fixed rate mortgage, is 1.79. It's been running around 2.5 to 3. So right now, when we look at a 30-year fixed rate loan at 6.71, That's roughly 2.9 above or 1.9 above. And yeah, about yeah, 2.7 above where we are, above the 10-year treasury. Well, those numbers can start coming down. And even if the Federal Reserve does nothing on interest rates, there is an opportunity for us to have a better market, a lower interest rate, which is the reason we've been talking about the two-step. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call.